Good morning, ladies and gentlemen. Yes, I am your wake-up call. It is Tuesday, 7 a.m. Eastern Time, bright and early. I hope you are ready for a great trading day. From what I could see in pre-market, it looks like we've got some nice opportunities already setting up. So let's go ahead and make sure you all can hear me. If you would go ahead, real easy modality for me today. If you will hit the number 1 for yes, 2 for no, and if you hit 2, I'm going to reach out and slap you. If you're saying you can't hear me because you did. In other words, I'm talking to myself over the next hour or so. Appreciate it. Thank you. There we go. Yes, it's definitely a little bit early for me today. I'm not used to being this alive at this time of the day. But I want to start off, welcome to Options Explained. But I want to start off with looking at the futures. Every day around this time is exactly what it is that I do. I want to look at the futures markets and see what's going on in futures. I've got a template set up here just for futures, if it'll allow me to open it. And it's what I call my APAC. I've got the 4 major futures markets, which is the ES, the YM, and I'm going top left straight across. ES, YM, NQ, Russell, and then bottom left is Bitcoin, then gold, crude, and nat gas. So let's go ahead and look first at what's going on. He's giving me a hard time. At what's going on there. I'm actually going to start a program which will help me with a drawing tool because I don't have drawing tools here. So just give me a second. Let me pull that up. See where it decides to open. And I want to just look at how the ES has done in the overnight session. All right, there we go. So I'm going to start this, but I just need to start the recording so it gives me access to the drawing tools, and then I'll pause the recording. I don't really need to record this. It's being recorded. So if we look at where the S&P 500 was, the ES, this vertical line is 6 p.m. last night. It's 5 p.m. last night is where we closed. Just depends what side you look at. It's 5 p.m. up to here. It's 6 p.m. over here. That's when we open back up. So we had a little bit of a bounce going into the Asian and the Australian markets opening up. We pulled back into about 10 p.m. And then we started a little bit of a climb. We normally get a little bit of a bounce around that 2 to 3 time period, but we just seem to have a steady flow going throughout the course of the night. Our trajectory has continued through the night. If we draw some diagonal lines in there, you've seen a nice increase in there. We're up about 16 points on the ES right now. So on the S&P 500, we're up about 16 points. So it's a nice little move so far into the day, right? So check. ES has got a bullish connotation to it. We look, and that's where I spend most of my time is looking at the ES. When I get asked the question, Rob, S&P 500, Dow, NASDAQ, where's the focus? Investors look at the Dow, traders look at the S&P 500. Is the NASDAQ a component there? Yes. But if I were going to rate them, it would be S&P 500 would be first, NASDAQ would be second, and then the Dow would be third, right? Russell is never one that I use that for a whole different reason, right? And it's for one particular trade setup that I tend to do. But the Dow is still important. It's still, the biggest companies in the world. It's the bluest of blue chips that there are. We've had a nice increase all evening long on the Dow, and that's literally as far as I go in the morning on what I do. As far as NQ goes, I invest in a lot of NASDAQ companies, right? Trade a lot of NASDAQ companies. So the NQ is important to me as well. So if we go and grab the drawing tool yet again, and the reason I like the drawing tool, and I do this for myself as well, it helps me to see the pattern without looking at the craziness of just where the candles are going, the ups and downs, and not having to change over to line charts and trying to distinguish between my moving averages and the line. So a little choppy, move up, a little choppy after that initial push last evening. We got a nice climb. The difference with the NASDAQ is right about 1 o'clock, we just went sideways. And then 5 a.m.-ish, we had that move down. And right now, we're in a bearish connotation with the way we're setting up. We've got these higher highs, but we have now broken our moving averages. Our moving averages have crossed to the downside, and we are bouncing off of that. So we'll see if we can hold. We're still up 18 points on the NQ. Right, so NASDAQ at 7 a.m. in the morning is still moving nicely. Russell, it just becomes more of a quick view for me. TradeStation is just not playing nice today. Overall pattern bullish, right? So just kind of confirming what everybody else is doing. Bitcoin, I am a big believer in the cryptos. I have Bitcoin in my own portfolio. It doesn't mean you should add it to yours. It's just something that's in mine. I'm looking for a place to add to it. I did not take advantage of the move last week. I was looking for a little bit of a steeper drop down than we actually got there, right? And I've got about 5 days here. So it went even further down than that. I was looking for more of a pullback. Didn't take place. I will be patient with Bitcoin. I do not want to see myself in, I don't want to average up in my cost. My cost is a very nice cost basis right now. Gold, gold in many cases is an inverse relationship to the market. What does that mean? When the market's going up, gold is going down. When the market's going down, gold is going up. Not always, but in many cases. We had a great run on gold yesterday at the end of the day. And then, so here we had a nice run into gold. We pulled back. There's that 5 p.m. again. And we've had a move down, which seems to have given us a little bit of a channel in there between about 1812 and 1815, let's call it ish, somewhere inside of that range. So gold itself is just kind of in a sideways mode right now, right? Let's see. Crude oil, very important to me because we did not when we bought our home have gas in our area. When we did the construction on our home and rebuilt it, we basically knocked it down to the ground. One stud was left. That was it. Everything else was brand new in this house. When we did that, we still didn't have gas in our neighborhood. So to get it now, we'd be throwing out boilers and stoves and all that. So we're still on oil at this point. So it's very important to me, the price of fuel, of oil. So I do watch it for personal reasons, but it's a great tradable vehicle. You can make some really nice money on oil. We've got one of the coaches that teaches an event for us every week that he does live training with students on futures markets. And there's a crude contract that he trades every single Wednesday as the announcement comes out on crude. And every Thursday he trades it on nat gas. So there's great opportunities every week on crude, but we saw a bit of a drop yesterday and nothing. It's kind of been muted move the rest of the day. And then when we look at nat gas, it's kind of the same thing. Nat gas is just not really giving us much. Okay. Hopefully TradeStation decides to wake up before the market opens. We've been sideways on nat gas. So that's the start of my day every single day of what are we doing in the markets. It sets my head up in the right place for what I'm looking for. From here, I bring it on over and I start looking at my charts and I start analyzing what it is that I'm going to do. Normally, I'm doing this research in the mornings before the markets open. So I'm down at my desk, usually 7:30, 8 o'clock or so. I'm sitting down here by 8:30, quarter 9. I've gotten all my candidates that are done. I'm doing a couple of videos for our channels and the various social platforms that we're on to feed that out to our students of, hey, look at these candidates today. I'll do one today that says, here's the pre-market candidates that I want you to look at. Some will be what's on our list now. Some will be things that are popping up along the way. In other words, newsy type items. I'm a big fan of trading news if it's done properly. So we've got a lot of candidates as potentials for trade setups today. I know you guys have your questions or your stocks that you look at as well. We'll take a look at some of those. Say Hey says you are fired up any time of the day. Actually, Say Hey, it's a natural reaction. Put a news announcer on the news at 4 a.m. or 4 p.m. It doesn't matter. They're the same way, right? I am very much in my teaching mode right now. And I have found by doing this, excuse me, by doing this now for, it's 1997. I've been trading the market and I've been teaching since 1999. So what are we talking about? 23 years now, 22, 23 years. I have found that if I don't get my energy way up, I start to talk like this. And that's how my hour would go. So I need to jack my energy up and keep it there. And now it's just habitual. I'm there, man. I am on fire. It wouldn't matter what time it was. My daughter's upstairs sleeping. I'm sure she's up there going, my God, would you be quiet already? Because she literally is right above where I sit. In my office is where her bedroom is. So, but she needs to get up earlier anyway, so nothing wrong with it. So I want to take a look at a couple of companies. First one I want to look at is Hood, H-O-O-D. But Rob, is that optionable? No, it is not. If we flip over and look at an option chain, Hood does not have options. And what it should say is yet, right? It needs a couple of million shares traded. I forget what the number is, 20 million. I forget what it takes to become an optionable stock. And why I say I forget is I don't normally focus on stocks like Hood when they first become IPOs. Let them become optionable first before I'm looking at them, right? But with the amount of money, assets that Hood has in control, right? Yes, I get it that they are no fee on their commissions, which is great. I have an account with Robinhood as well. I don't do a whole lot with them. Payment for order flow is something that every broker accepts. What that means is the market makers, the options exchanges rather, say, listen, Hood, Goldman Sachs, Fidelity, it doesn't matter who it is, TradeStation, we will pay you for every order you send our way. It's a small amount. You and I would make no difference whatsoever. But when they're trading millions and tens of millions of contracts a day across a vast amount of companies that they trade, it's huge. Well, there's concern right now, and I saw this in SEC interview with the president, chair of the SEC, that there's concern that payment for order flow is being taken advantage of now. You are supposed to get what's called best bid, best ask when you're placing your trade. Whether it's options, whether it's equities, it doesn't matter. Futures, Forex, totally different scenario. But you're supposed to get best bid, best ask. There's concern that, this exchange, the ARC or BATS or whoever, is going to pay a higher fee. So maybe we route the order a certain way that it lands on the doorstep of that exchange because we get a higher fee, which might mean you're not getting the best price, right? That is something definitely to be concerned with. The SEC is working on making sure that that is known. They're literally going to have to be very pronounced about it of we are getting paid to route your order this way, to let you know. So is there a trade-off between the no-cost commission versus the payment for order flow? Yes. And just keep in mind, guys, my very first options trade in 1997 was with a Merrill Lynch. I picked the stock. I traded 10 contracts, and it was $200 to get into the trade. And it took me hours to find out if I was filled or not. And that was because I picked up my phone. It was not a cell phone. It was a corded phone. Something like corded. I know. And it was like, dude, tell me where my order is. And the answer I got back was, I will call down to the floor and have a runner go to the pit and see what happened. Huh? That literally is how long it took to find things out. I could have sold it before I even found out if I bought it, right? I had no idea what was going on with it. I think Hood is a great potential as a company. I think it may be one of those Snapchat type stories where when they first came out, they didn't really know how to market. And when I say market, they didn't know how they were going to make money as Snapchat. You can only make so much off of 12-year-olds, doing the videos on your screen, right? On your platform. Hood had a really bad showing. When Kramer comes on CNBC and says, who was it? It was Faber. David Faber had said that they got contacted, notified that there were a lot of shares available on Hood if they wanted some or something like that. And the Kramer jumped in and goes, that's what I was afraid of. I don't think we're going to see a good show. And you really didn't, right? Hood did not give a good show starting off. If we look at a daily chart, and I'll zoom in on it as much as I can because it's only 3 days long, right? That's it. Look at the first day where it opened up right here. It ran all the way up here and then came crashing down. It's had some recovery now, almost back to where it was. I think Hood is an opportunity if you're looking for equity right now. I definitely want to know when their options become available on Hood. That's going to be very important to me. But for right now, it's on my list every day, which is why it's here. It's on my list every single day so I can keep an eye on it and learn when the options become available so I could start taking advantage of it. I think there'll be a lot of misprice on the options. What that will mean is I will be selling premium right out of the box if I think it's a misprice, right? And it's going to be hard to really tell because the implied volatility is going to be off. There's no real great historical volatility on it. They can calculate what they thought it might have been before they became an equity, but really not what I'm looking for, right? So definitely Hood is one of them on my list, right? I want to look next at Adobe, right? And I'm going to flip over to, I have two different programs that I use. I use TradeStation and I use a proprietary one that's called Omega Charts. It is our program that we use, that all of our coaches, all of our students use. And I want to go over to Adobe. The scannability, the charting platform, the charting engine, the everything is superior to this, to what I see. We run TradeStation in white on our own live streams that we do on a Monday, because the black interferes with one of the software programs that we use. And if you compare that white to this white, there's no different. There's no comparison. This is a better view for me. So what I'm looking at here is, I'm a very big Fibonacci trader. So I've got the fibs drawn here on Adobe. Let me grab a pen. Here's my V bottom. Nice move up, sideways move in there. That's all fine. Nice move up. Took a long sideways move. Ran right into that Adobe. Adobe ran right into that Doji. Right, I'm mixing up Adobe and Doji, and then pulled back. Right, we got to pull back to just about the 236 level. The 236 level is hesitation. Write that down if you don't know it. Ingrain that in your brain. Get a sticky, put it on your monitor, on your wall, whatever it is. You need to remember this is a hesitation point. Stocks tend to pull back to that level, hesitate there before bouncing, breaking, doesn't matter, but before doing anything next. All right, so what happened? Well, we've got another line in here, which is a 118, which I call a fibit. And there's a rule that I use for determining whether we need that line in there or not. And basically, you look at the wildest average true range, which right now is 10. I know that because it says here RR fibit. My fibit is double the wildest average true range, so 20. If the distance between 609, the 236, and the 0 line, or any two lines, is greater than 20, 2 times the wildest average true range, we need to split that level in half. And when we did that, look at how we have just hung right on that line, right? And we've been there consistently over and over and over again. If I can get a bounce off of the 620.32 level today, there's an opportunity for a potential bullish trade. That could be done with buying a call. It could be done with a credit spread. It could be done with selling a naked put. Any of those will work. But beyond having that 118 line there, right, that 620 level in there, what's even more important? Look at my moving average. That 8 moving average, as it sits there, I've got my fib line, and I've got the moving average sitting right up to that level. Well, what does that mean? Well, what that's called is a confluence. So you've got Fibonacci traders that are over here on my left, and they're looking just at Fibonacci levels. You've got traders over here on my right, and they're looking just at moving average levels. And my moving averages are 8, 21, and 55. 8, 21, 21, 55, 55, all exponential. Well, when you have a group of traders looking at a setup, another group of traders over here looking at a different setup, but they happen to be in the same place, it gives us a confluence. Well, what does that tell us? If I were grading this trade, if I were looking at this trade, I would give it an A. Why? And the A is only for where the stock is sitting right now. Do we have the potential for an explosive move, a bullish and or bearish, it doesn't matter, but in this case, bullish move? And the answer is yes. Why? Because the fib line is a floor. It's a support level. The moving average is another floor. Well, guess what? We've got kind of thicker beams or two floors backing each other up. It's a harder press to break through that. Doesn't mean it doesn't or won't break through, but it's a harder push to get through that level than if we just had one. So by having both of those levels there, I'm very interested in this as a potential bounce. Now, we have hung kind of sideways ever since hitting that top, but yesterday's open was a nice boost. I like where we closed. So if we can get above that, let's see, we closed at 618.75. If today's move, this is what I want to see. We grab the drawing tool. In an ideal world, today, intraday, I want a small move up, not that high. I just drew it so you could see it. A pullback and a bounce off of the 620.32. That is my setup. You may look at this and say, Rob, but I'm a breakout trader. Awesome. Then you'll take the breakout. I don't take breakouts. I take the pullbacks, which means, yes, I will miss out on some trades. So if you're a breakout trader and I am a pullback trader, you will have more opportunities to trade a position than I would. If I am a breakout trader, a pullback trader, and you are the breakout trader, I will have a better chance of being right. There are less head fakes in there. They're called here kitty kitties, right? Where they're just kind of trying to lure you in here, kitty, 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 right? Trying to catch you. The breakout, if the breakout is right and you catch it, man, the explosion is awesome. But the pullback and bounce, if done right, let's liken it to this. The breakout trader, you're a home run trader, right? The pullback trader, I'm the guy that gets singles over and over again. Hit some doubles and triples. Every once in a while I mess up and I get a home run too. Not my goal. I'm not trying to get a home run. I'm trying to get on base a lot. All right. So as we're looking at Adobe, yeah, I say, hey, it's definitely a pressure cooker trade that builds up in there. That pressure cooker, which is a trade that we developed here on futures at WealthbuildersHQ.com, that pressure cooker is a great trade setup. We use it more on a 5-minute chart than we do on a daily, but it can be used on any chart. It's a consolidation pattern. It's exactly what it is. So if we go back over and look at, let's get TradeStation up. And let's go back to Adobe. So now the question is, are you a day trader or are you a swing trader? On Adobe, you could do either one. Adobe moves on average $10 a day from high to low. If I could pick up $2 or $3 of that, I could do that easily as a day trader. If you're a swing trader, you need to go further out in time. Here's my rules. As a day trader, I trade the shortest time possible. The shortest option that I have traded to expiration, the closest I've ever been, is at 3:50 p.m. Eastern time. I entered into a trade 10 minutes prior to the market closing. Right now, I wouldn't do that if I had a really bad internet connection. I wouldn't do that if I didn't understand my trading platform as far as how to finagle things around in there. And I certainly wouldn't do that if I didn't have experience in trading, right? Or if you're the individual that says, oh, just one more minute, right? I've done this stuff in hotels before, teaching live events. It is not good when you're trying to do that on a hotel's internet connection. So you want to make sure that that's strong. But with that being said, it was on a very specific setup. It was on Apple. It was a very specific setup. It's meant to take place at the end of the day on a Friday. The trade doesn't work any longer because Apple's pricing is not really, they're not that big mover any longer after their last split, at least not yet. They may get there, but they're not there right now. But for me, if it's expiration Friday, I'm going to trade Friday's contracts. If I'm a swing trader, I need at least 30 days as much as 60 days. You may not get what you want in 30 days. So let's see what I want for me to say, yes, this is a potential trade. So if I want to day trade this, here's what I'm going to do. First off, let me try to get less contracts up there. We don't need all of the, we need a little more. Nope, we're going to need more. Sorry. We need, let's see. Try not to flood the screen with strike prices that we're never going to use, but I don't have a choice. Can I keep all this on the screen? Yes, good. You can see everything that I need here. So the very first thing I am looking for is I want my delta. Delta is rate of change. I want my delta to be between 65 and 85. Somewhere in that range. I see we got a couple of 86s in here also. Could just be a misprint, right? But I want it between 65 and 85. But I want to buy the option personally closest to 65 as possible. Well, Rob, what about 64? Is 64 close enough? No. I want it 65 to 85 because here's what happens. If I tell you 64 is okay, you know what the next question is? How about 63? How about 62? How about 57? 65 is kind of my threshold of where I want to be. I don't want to go down below that level. I want to keep it at that 65 or higher. And the reason is only cost. That's the only reason for it. I can get in this trade for $7.38 per share, whereas with the 85 delta, it's going to cost me $21 per share. 3 times more to trade the option. Now, will it move more? Yes, it will move more. Without a doubt, it will move more, but not enough to make it worth my time and money to put into this trade. So Let me see if I go here, maybe. Okay, good. I just wanted a white surface to draw on. If you look at a bell curve of an option, yeah, I'm off a little bit, right? 65 to 85 is the sweet spot. That's where we wind up with our delta range, right? There's a reason we don't trade those lower deltas, especially on the day trade. We don't trade those lower deltas. If you do, your movement is not as great because delta tells us two different things. The first thing delta tells me is rate of change. What it says is every dollar the stock moves. If I have a 65 delta, every dollar the stock moves, my option moves 65 cents. If I have an 85 delta, every dollar the stock moves, my option moves 85 cents. Well, think of the numbers in there first off. If I pay $10 for an option and my delta is 65, it means my option is going to move from $10 to $10.65 theoretically. If I have a $20 option and it has an 85 delta, we're going to move from $20 to $20.85 if Adobe goes up by $1. So I would make $20 more and I have to invest double the money. In this case, with Adobe, it's actually triple the money to make that extra 20 cents. Right? So for me, that's the delta that I like. You can choose anyone you want. That's okay. That doesn't matter. Whatever floats your boat, you use. These are my rules. I'm not here to tell you how you have to do things. I'm here to tell you the reasons why we do things. Guys, I've been doing this since, as I said, 1997. I have taught tens of thousands of people live on location and thousands and tens of thousands more online. And I can tell you right now that when you follow the rules, you've got the best chance of being successful. So that's number one, delta. What's the next thing I need to see? Because just because I have enough delta doesn't mean that the option works. I need to see open interest. So delta was number one, open interest is number two. I need a minimum of 100 open interest. So I had that 65 delta. I have 348 open interest. Open interest tells me how many contracts are open in somebody's hands right now, that I can consider as a currency almost. You know, someone has value in it or believes there's value in it that they are trading it right now. I don't want to have less than 100. You're opening yourself up to the market maker. See right here is 75. It's the only one on the screen. Let's see on the put. Even on the put side, we've got plenty of open interest. So I don't want to be on the wrong side of that. So I want at least 100. So this 191.88 strike price, very odd, weird. Oh, this is on NVIDIA. This is not. What happened here? Let's go back. I'm on Adobe. Why did it not change? Told you, trade stations give me wacky results today. There's Adobe. Okay. Well, what just happened on Adobe? I was wondering why I needed all those strikes. What just happened on Adobe? Let's see. Did any of you catch it? Nope, none of you caught it in the chat either. I'm glad I did. All right, so let's go back and look. Let's reevaluate. It's still not right. It's Amazon. What are they doing to me? These are linked. And should automatically change to the correct symbol. There we go. Finally got it. All right. I don't think we need all of them. It's on the 30. Yeah, that's better. Awesome, better. So let's see. I am looking for an open interest of 65 to 85. I have 66 up to 79. But I do not have enough open interest on any of these. So none of these would work as a potential day trade. All right, so for some reason, it's showing me an X up here. I don't know why. Usually it's telling you there's an error. I don't have any real open interest until I go to the out of the money. So I would have to go and look at another week and see, do I have open interest? I do not. Right? We go out to the monthly option, and that is where my open interest comes in. So would I trade the weekly option with the open interest the way that it is? And the answer is absolutely not. John, it looks like you did catch it that on Amazon, so thank you for that. I would not trade the weekly on it, the August 6th. I'd be out to August 20th. So a little bit more cost, but it doesn't matter. I'm not going to open myself up to getting my head handed to me. Off with her head. 68 delta to 82 delta. All of these have plenty of open interest. So I'm going to buy the 605. It's going to cost me, you've got bid and ask, which is very tight on this position. I like it, of 20 by 20, 40. So we go to the mid, which is where I always try to start off. So we're looking at $20.20 per share. Is it more expensive than going after the weekly? Let's see. Let's do a comparison. The weekly with the 65 delta is, we'll call it $10. The 65 delta here is $20. So we're spending twice as much to enter that trade. But keep in mind, open interest is like going to a party. I love going to parties. I just don't like to be the only one there. That's called the pity party, right? So the market maker, you will dance. When you go to get out of that trade, you will dance with that market maker if you have that small of an open interest in there. All right. So let's see. So that is from a day trade perspective. If I am swing trading, in other words, if I believe that Adobe has the opportunity to move dramatically over the next X, 3 days, 5 days, 2 weeks, whatever it is, I'm looking for at least 30 days of time. Now we're on the weeklies that are out this far. We don't have the open interest. So there's my 31 days. If we go to September 10th, we got 38 days weekly. So you can see, you'll get to learn stocks that just don't produce those types of numbers. We come to the monthly, which is in white, right? We've got 45 days left. I said 30 to 60 days. We've got 45 days left. And you could see that we've got some open interest on our positions. So if I am looking to swing trade on Adobe, what would I do? I'd be looking at the 66, without a doubt, would be the strike that I would want, the 600 strike. That would be the delta, plenty of open interest. And I can move all the way up, to the 84 delta, keeping in mind that some of these don't have enough open interest. See the value of drawing on the screen? So I could spend $30 a share. I could spend up to $53 a share. Why would I spend the 53 when I could spend 30? It gives me less risk in this trade. I can use that other $23 of capital into a different trade. Now, if this is too expensive for you, so be it. This may not be a stock for you. But if you day trade these, if you can day trade these, you can, and it's an expensive stock. It's $600 stock. If you day trade positions like this, you can get a much bigger bang for your buck than swing trade. And what I mean by that is with a smaller account, you're probably not able to do this out to a swing trade, where a day trade, you might be able to. All right, so let's see. So say, hey, said, how much, if any, will the open interest change when the market opens? Zero, say, hey, good question. Open interest never changes while the market's open. Open interest is a factor of yesterday's close, how many contracts were open in somebody's hands right now. Volume is what will change when the market opens. Right now with volume, let's say you had 75 open interest on a company, on a position, right? And then you wind up with 50 in volume today. In other words, 75 contracts were on the close of yesterday. 50 came up today as a fact of people have traded that. Well, that doesn't mean you now have 125 of open interest. All 50 of those could have been sells. Probably not, but they could have been sells, right? You won't know unless you go back and look at the trail of what's actually happened in real time and look at every trade that entered, in the time and sales type report, which no one has time to do that. I don't anyway in my life. So we don't know where the buys and the sells are. We wait for the end of the day and they roll volume. You can see the volume column is zero. They roll the volume into the open interest and we know what the new number is. Because some of those trades are buy to open, some were sell to close, right? Or buy to close, whatever it was, but they closed out some of the contracts. We'll know that after the open interest readjusts tomorrow. So we focus, say, hey, just on open interest as a after the market closed number for us to do, right? Future Money said, so the governor wants crypto tax. Why? The Federal Reserve can create dollars out of nothing. Yeah, well, listen, it's just, we're not going to get on a government rant here. There would not be a good scenario for me. I have very strong opinions on government. One of them are, what do you call 100 politicians at the bottom of the ocean? A good start, right? Dum-dum. So, yeah, smash the like button, guys. If you like what we're doing here, smash the button. It is an A trade. Yeah. So, yeah, say hey. So an A trade was when we talked about, just because I didn't see that until I just looked now. An A trade said if I graded it, because the 8 moving average was at the confluence level of that 620.32, I would give it an A. If we went back a couple of days, let's say to here, right? Or if you're a breakout trader and you're taking the breakout on this candle and the moving average was down here, I would give it a B. It's still a bullish bias, but I don't have the confluence in there, so I would rate that as a B. If you were taking the wrong trade, I would rate it as a C, right? It's very simple. It's just 3 letters, ABC, of just to put in my head, how does that chart look to me? You need very defined rules. I have a very high-level coaching group called our Inner Circle that our next training that comes up in September, it's a full day training. We're going to go through, we've got about 20 different factors that we're going to build out a grading system for our charts that we can then go ahead and measure exactly based on a grade instead of just ABC. We'll be able to apply a number to it by putting a weighting factor to each of those things, such as when is earnings coming out, and all of the various components there will play into that. But that's where the confluence came in there, of that grading it in A. So let's see. So if I follow you correctly, you would be buying $600 strike. Would you also sell a call on the higher strike against it? So Sifandes, I think, is the pronunciation there. If not, sorry. So if we go back to the option chain, let me just move that where I can see it better. If we go back to the option chain, we were talking about the 600, right? The question was, if I buy this, would I sell another call? That becomes a very, very, very different trade than what I'm talking about. One of the trade setups on my, and guys, here's my list. If we don't get to all the candidates, which we won't, right here is my list. I'll make it full screen for a second. That's my list for today, right? By trade setup, I'm looking at Reddit trades of AMC and GameStop. I'm not trading both of them. You'll see why in a moment. 1 covered call or naked put, 4 diagonal spreads, 1 credit spread, and a bunch of day trades. Now, those day trades could also be swing trades. I just put them under one category, and I'll see what they're doing compared to what the chart on my Omega charts looks like. And from here, I'll make a decision. Am I day trading it or am I swing trading it? Now, to go back to your question of am I going to sell a call against it, that would be a much different strategy. That is called a diagonal spread, one of the trades that were on that page. So here's the diagonal spread on Adobe. If we go over to at least 120 days as a minimum, this would be the options I'd be looking to buy. Now, remember, how many contracts of open interest do I need? 100. I don't have any open interest. So December doesn't work. I'd have to go out to the January. The January option is 171 days away. Here's the January. I need that 65 to 85. Can I find an option there, 65 to 85? The answer is yes. I have it right here, the 580. So I would go ahead and I would buy the 580. Okay? I buy the 580 on Adobe. But now I need to go back and sell an option against it, and I would be looking to sell an option with a 40-ish delta. So my sell would be right here. We'll take it down to 1 contract just to make life simple. So we're going to spend, even at the midpoint, $64.90. Could you do it? Yes. Would I do it? Not as a diagonal spread, absolutely not. Could I do it as a credit spread? Again, depends the trade setup that you're looking for. As a diagonal, I don't do these on stocks over 200, right? So to me, when I look at this, I'm like, too expensive. Too expensive. Not interested. Now, if we turn this into a credit spread on Adobe, we would be looking at a bull put spread. Well, you guys are getting the whole gamut here today. Right? Here's what I'm looking at. I am looking for a strike that is somewhere down below that 620. Now, we're at 619 now, 618.75. I think we're up a little bit in pre-market. We're at 618.75. So I need something down below that 618.75 for me to say, okay, I'm all right with that. So we're looking for what? We're looking for something that is around that 617 or so. So watch what I'm going to do. I'm going to change this over to a vertical spread. I am not changing anything on strikes. I want them to be one strike apart. So if I did the 617.5, 615 spread, right? Here's what I'm doing in actuality on this trade. Let's take that down just to get it as big as we can on the screen. All right. So if I have, let's do it over here, just so it's easier to see. If I go in here and call this the 617.5, right? And we make this the selling position, green, because we're getting paid for it. Actually, let's make it a little thicker, a little easier for you to see. All right, now we're going to duplicate that line. I'm going to turn this into the 615. And I'm going to make it red because we're spending money on this position, right? That trade right there, I'll drag it down so it's a little bit easier to see. That trade right there, that 617.50, I'm going to sell to open, STO, sell to open. There we go, STO. The 617.50 put. Right. Then from there, I am going to BTO, buy to open. The $615 put. And this all happens for a credit. If you look at it on this page here, 615, 617 half, I am looking at a credit of $1.15. So if I sell this position, now they both load at one time. It's easier to drop it down to one contract, just math. It's pure math. I always go to the midpoint. There's big spreads right now, pre-market, crazy market, whatever you want to call it. So I always go to the midpoint. So we're looking at $1.15. Now, my maximum risk in this trade is what? My max risk in the trade is the difference of these two strike prices, which is $2.50. Let's see. Where's my calculator? So if we're taking in, what is our risk in the trade? If we have $2.50 and they paid us $1.15, we've got $1.35 of max risk, MR, max risk in that trade. Now, we go cash in our pocket is 1.15. Here's rate of return calculation. Take the cash in, $1.15 divided by the cash out. I need to have 1.3 divided by 1.35. If I am right in this trade, that is an 85% rate of return on this trade. The most it can cost me in this position is the $1.35 because they paid me $1.15 right now. They paid it to me. We're done. I have that cash. It's mine. I got paid up front for it. That's why it's called a credit spread. So I take the credit on this, apply it towards the 250, $1.35 is my max risk in this trade. This is a lot different than buying a call option. See, when I buy a call option, the stock has to go up. Has to go up. Has to go up enough to make up the difference of the bid-ask spread. It has to go up enough to make the difference of the time value deterioration. It has to go up enough to make the difference of the market maker going, ha ha, we're going to change the weather on you now. And just change implied volatility, bid-ask spread, whatever it is, they fool around with a number and you're back underwater again. The position of just buying a directional call has to go up enough to make up for any of that might occur. When I sell a position like this, I have just said I am selling the $617.50 naked put, but I am buying an insurance policy down here at $615. If the market were to drop and stay above $617.5, I make money. If the market drops now and stays in the, let's say it drops to $618 and stays at $618 on expiration date, excuse me, as a call buyer, I lost money. As a naked put, or in this case, a credit spread seller, I make money, right? The stock goes up, I make money. The stock goes sideways, I make money. The stock goes down a little bit, I make money. Where do I get in trouble? The stock goes down a lot. How much trouble do I get in? Well, I spent $68 to buy the option if I was a swing trader. No, that's not fair. Let's do day trade. We spent $20 to buy the option as a day trader. Here, somebody's paying us $1.15. Yeah, I like getting paid to trade. I don't know about you, but I like getting paid. That's my thing, is give me the money. Show me the money. Help me get the money. Right? This is one way to do it. Right? So that 615 put is a protection for me. If, let's say the stock drops, and I'm not going to make it pleasant. The stock drops all the way down here to 600. Woo, baby. Ouch. How much do I have at risk? $1.35. Adobe goes to zero. How much do I have at risk? $1.35. If you bought a longer term option, $20, $40, $100, whatever it is, how much do you have at risk? The $40 that you spent on that option is what's at risk. Here, my credit is mine. The $1.35, what's left over is my maximum risk. Well, Rob, what if somebody, it gets to 600 and like, yes, we're putting the stock to you. We're making you buy it at 617.5. No worries. I'm going to make somebody else buy it at 615. And I don't even need the cash to do it. It's a transaction. It's a push. You only can do it the day that you're exercised. You can't do it tomorrow. If you're exercised today, you have to do it today. But the broker also has to notify you that you've gotten exercised. It doesn't mean they track you down, baby. If you gave your broker an email address that you never check, you better change it. You better make it where you know that you got an email for that position, right? All right, let's see what we got here. So Snap says, is there a website you can recommend to track the open interest from each day? I've never looked at that. Snap Crackle Pop. I'm stuck on Snapchat right now. I've never looked at it for each day. I'm just worried about what's going on today. You'll get to know the stocks that have greater open interest. You'll know that Amazon has enough open interest, or you'll know that Netflix and Nvidia have enough open interest. Facebook has enough open interest. AMD has enough open interest. You'll get to know that companies like General Electric, maybe they don't have enough open interest, right? Yeah, say, hey, I agree that aqua line there, bluish line there is a lot easier than the green line to see through it. I agree. It was a good choice to change that. Mason said, can you explain why 60 delta is ideal for day trades? Sorry, I missed you earlier. It's not 60, it's 65, Mason. And it's a cost relationship is all it is. If we go back here and let me clear this out. Let's X out of this trade. Markets are not open. I couldn't place it anyway. Let's see. If we go here and look at, let's get something a little bit more realistic. Let's go to Home Depot. All right, here's Home Depot. Here's a weekly option. I've got plenty of open interest. Oh, wait, we're on verticals. Single. I've got plenty of open interest. Here's a 68 delta that I would spend $3.98 for. Let's use next week's option. Only for the fact of we're looking at delta cost there. Right? If I went to a 70 delta, I don't have a 65, Mason. If I went to a 70 delta, I spend $7.10. If I go to an 84 delta, I spend $11. So let's call it $7 and $11. I spend $400 more for that higher delta. If the stock goes up $1, I'll make 70 cents on that 70 delta. If it goes up $1, I'll make 84 cents on the 84 delta. Well, that means I made $14 more, but I needed $400 extra to make that $14 more. You see where I'm going with it? Let's see. Will this make any difference? Yes. Okay. So Mason, I hope that part was a help right there. But here's the bonus. Here's something that we talk about in our high level coaching stuff we do all the time. Look at this 70 delta right here. Again, we're spending $7.10 and we're looking at the 322.5 call option, assuming we're bullish, of course. And then we're comparing that to the 84 delta rather. Right here. Well, I have a gamma of 2 and a gamma of 3. Gamma is rate of change of delta. If the stock goes up $1 and we have that 322.5, we're going to have a 70-cent increase in the value of our option, but that's not really a true statement. It is, but it isn't. We're going to have a rate of change of delta also. Gamma tells us how much delta will change. Delta will change by 3. Now, this is not a huge difference, 3 versus 2. You'll find times that it's 12 versus 8. So my delta here will go up to a 73. My delta here will go up to an 86 right? Comparative to where they are. On the 322, it'll go up by 3, my delta. On the 317.5, it'll go up by 2. It's not a big difference, but that rate of change, now do that a couple of times more where we continue to grow. It's not $1, it's $2 and $3. So let's say it's $10. Again, it's easy numbers, right? We'd go up, we won't get full 30 there. Let's say it's $5. We'd get a 15-point increase on the 68 delta or the 70 delta one, and we'd get a 10-point increase of delta. So that's a huge difference. So Mason, a big part of it is cost. The other part of it is how gamma is affected. And you will always have, never say always. You will almost always have, in theory, you should always have it. You'll almost always have a better rate of return on, as far as gamma, on your lower delta strikes than you will on the higher. And look, you get down to 4 or get up to 4 on gamma if you keep going. But you're in a whole different ballgame there. Now, there are people that trade at the money and out of the money options and are very successful with it. Here's the thing. If you're an experienced trader and you got your shit down and you stuff down and you know what you're doing, you do it. But man, if you are not an experienced trader, sorry, I'm very passionate about this, guys, because I have seen accounts wiped out because of this insistence that somebody else knows better and they're very inexperienced in the market. But I can afford that option. If you look at this and say, I can't afford it, then don't do it. Don't do it. Just next, pass. Move somewhere else. Find a different company, right? Good. Say, hey, I'm glad it worked. Gotcha. Makes sense. Good, Mason. Excellent. What does it mean when a ticker gets a gamma squeeze? So the gamma, the squeeze there is just how the traders are going after that big gamma. They're noticing that the gamma on a certain option, gamma is running 7, 7, 8, 8, 9, 14. Traders are attacking that gamma and trying to get that push, that squeeze off of that gamma and trying to get that big move off of that higher gamma. Let's see. Good, Matt. Glad. So GP said, you forgot to explain the possibility of losing, and this is where the price will not do upside or downside. This is the case, the 135. Yeah, oh no, I said you've got 135 at risk, GP. Absolutely. Absolutely. You certainly have that 135 at risk, without a doubt. But what is my risk in that trade? My risk is my delta. If I was trading at that 617, and I don't remember, that was Adobe, I think we did, right? Let's see. This works so much better when I use all 6 monitors. Let's see. So my risk in this trade was the difference of those 2 strikes. We had the 615, 617 half. That was my risk in the trade, that 135. And yes, I will have trades go against me. Really, Rob, even with your system? And with anybody's system. Anybody that tells you they don't lose, lies. I had a guy one time telling people that he's never lost on a trade. Look, I got all these trades for years. I've never lost on them. Yeah, but then you come to find out he bought a stock at 40. It's trading at $1.12. He never sold it, but he didn't lose because he ain't sold it. It might go back up. It might not. Guys, if you like the setups and things that I do, I send out free setups. And you see the thing scrolling across the board right now. I send out free setups every single week. I do a couple of them a week. Trade with Rob is where you're going to get that. tradewithrob.com/go, right? And what I basically do is I give you all the details of the trade. You know, how valuable are those trades? Here's every single trade. And guys, they're all either on my website, and we've switched them all now over to YouTube. They're either on my website or on YouTube. Every one of them are listed there of what we've done. And now you can see everything we've done from May 20th. We're up $10,987 doing just 2 contracts. Just 2. That's it. Just 2 contracts. You can see we've only had 2 positions go against us out of 19 trades. These are free, guys. This is a free video that you get with all the details right on the screen. It shows you where your 2 targets are. It shows you your stop. We talk about how to adjust your stop and to where. I have 2 open trades right now, which are the last 2 we did. ANTM, we took 1 exit on already. We're up 750. And Microsoft, we're in the trade, but we haven't taken an exit. But that was July 30th. We took the trade, which was Friday. We got Friday's close and then Monday's close. So we didn't get an exit yet on there. All right. If you're interested, guys, check it out. I mean, it is a free video, a free thingamaboobly that you can go to. Right. And listen, if you guys have, and I don't have a way of dropping chat in here, comments. Let's see. I don't think I could do it from here. Nope. That's private chat. I have no way of dropping it in on this computer, guys. But if you go over, we're doing a live training in New York coming up on September 17th. It is a full day, 9 a.m., 6 p.m. It's out in Nassau County, right near the Coliseum, the Nassau Coliseum. It's at a hotel right in that area. And it is a free one day. It is a live one-day training. It is not free. It is $99 to come to that training. If you have an interest in that, guys, we've already sold half of the tickets out and we've not tried. So we've just put that up now. It's on our website. If you go to WealthbuildersHQ.com, just log in. You got to be logged in to get to the members area. And you've got this charting your way to success, right? It is a live one-day training that we're doing. It is $99. That's it. It's $99. And even beyond that, if you show up after you've invested your $99, we're going to give you $200 back in credit to use anywhere and anytime you want, right? Just the $99 this is my welcome to the reintroduction of life again to all of our students, right? You guys are very much our students, just like the students that we see all day long in our own trainings that we do, whether it's on YouTube, our live shows on Monday, our live shows on Friday that we do with various coaches. For $99, folks, you're getting a full day. Yes, if you could put up with me for a full day for $99, and you will be rubbing elbows with our highest level coaching students, both from our inner circle, our mastermind are going to be there. We're going to rock. We're going to rock in there, right? We're going to have a great time. It is not an online training, Sam. It is live in New York. We're not doing anything streaming. We have had crazy happenings with that. Just not willing to take the chance on it. All right. So yeah, it is not online. It is definitely live from New York. Right. But guys, bigger thing, do not miss out on signing up for this free training. tradewithrob.com/go. Right. I think we're about there. I think we about hit the post. Let's see. What do we got? The last things on there. Alfred said, how long do you like to go out in your calls? 30 to 60 days. If I am swing trading, day trading, as short as possible. And there's the 8 o'clock bell. All right, ladies and gentlemen, we're off. Have yourself a wonderful day. Make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. I will see all of you at our next show next week. Take care, folks. Hey, check out our website and get on that tradewithrob.com/go. All right, talk to you soon, folks. Take care.